Folks, we've got about 54 minutes left to trade before we close out what's been such a volatile first week of the second quarter. Even with the point gains that we're seeing for this session, you can see the Dow is still on pace for its worst week in more than a year. It will have lost about 2.25% for the week. S&P down 1%. The Dow and the S&P, by the way, are on track to snap 2-week winning streaks. And it looks like the Nasdaq will lose about 1%, just under 1% for the week. The gains we are seeing today, though, come on the heels of the March jobs report. U.S. employers hired 303,000 workers in March, way more than the 200,000 expected. Unemployment ticked down to 3.8% from 3.9%. Annual increases in wages did soften from the previous month, but still came in up 4.1%. This stronger labor market complicates the Federal Reserve's stated plan to cut interest rates sometime this year, which has triggered a stellar rally in precious metals over the past 5 sessions. Look at the move in gold. Gold has gained about, four full percentage points over the week, $60 per troy ounce. And as you see, we've got another fresh record high for the yellow metal. Silver is no slouch at all. In fact, it's looking at a 10% gain week to date, both a precious and industrial metal. That's what silver is. It is melting up this week. Nice move there. Let's bring in the floor show traders to tackle all of it. Economist and perennial gold bug Peter Schiff joins us, along with options king John Najarian of Markets Rebellion. John, at this time yesterday, stocks plummeted on news of that tense phone call where President Biden basically threatened Israeli Prime Minister Netanyahu, saying that unless Israel agrees to a ceasefire in Gaza, the U.S. might pull out aid, or at least diminish it. That stock sell-off we saw yesterday appears to be over, at least for now. Did investors who were hoping for an entry point just simply miss it because it was so fast?
I guess the simple answer is yes, Liz, but I didn't view yesterday's, very small pullback in terms of a percentage move. I didn't view that as an entry level, really not for the way that I trade. I think you'd really have to be a high frequency trader practically to get into that. I do think we'll get more opportunities, Liz, both from the tensions in the Middle East, perhaps putting some pressure on stocks. We've seen the volatility index up 30% just in the last 5 trading sessions. And we've seen the crude oil index, the OVX, the volatility of crude oil, moving up substantially. So I'd say that could create a better entry in the coming weeks, as well as more Fed speak like Mr. Kashkari yesterday that you just detailed.
We're putting up on the screen what you would buy if you were an investor who wanted exposure to the markets, John. What is that trade? You're saying there are call and put options that you could mix and match.
Well, you could. Of course, that's always true. And, you're an astute market watcher and trader, Liz. I would say that I would be buying at-the-money S&P 500 calls out in August. I'd want to give myself time. They're going to decay much slower. And then I would start selling May options, call options against those that I purchased. The reason for that is faster time decay, and also that I think we're going to get a move or a non-move, perhaps, at that meeting 26 days from now, when we actually get the FOMC meeting again, Liz.
Okay. Yeah, Peter, no flash dip at all. No opportunity to jump into gold over the past at least a month or so because it just keeps hitting record after record. Can you explain to our viewers why we are continuing to see gold spike so high?
Yeah, well, first of all, Liz, the labor market isn't strong. It's weak. All the jobs that are being created are part-time jobs for Americans who are forced to moonlight because inflation is driving up the cost of living. And inflation is going to keep going up. That's why gold is rising. It's a signal that the monetary policy is wrong, that Powell's rate cut could go down as the biggest mistake the Fed has ever made. And they've made a lot of mistakes, so that's saying a lot. In fact, they should be raising interest rates, but the gold traders know that Powell is too afraid to raise interest rates because he'd cause a financial crisis. But if you look at the landscape, oil is already up 22% this year. It was down 10% last year, and the CPI was up 4.1. Imagine how high it's going to rise this year with that move in oil. Look at the CRB. The commodity prices, which were flat last year, are already up 17% this year. It's only the first quarter.
Yeah.
So inflation is coming roaring back, and the Fed is pretending that it's gone away.
Yeah, you know, you look at oil as well. Oil has had an incredible move. Gold, of course, hitting a record right now, $2,342 a troy ounce. But let's bring back John to the conversation. You know, when you talk about oil, you add other commodities into the mix, whether it's RBOB gasoline, wholesale, just about everything else except maybe corn and wheat and natural gas. Those are down year to date. What is the trade there? Because you can look at the volatility that we've seen lately and well, I'll let you tell our viewers, John.
Well, we've seen a lot of speculation, Liz, and even some M&A or mergers and acquisitions going on in the energy space. And that's not surprising because we've seen a 6-month high, I believe, out of crude oil as it trades up through 86, and Brent is through 90 right now. Middle East tensions, as well as what's going on with drones back and forth, Russia to Ukraine and vice versa. That's all going to put more demand or at least lessen the supply, Liz. And either of those, either taking some of the supply away or increasing demand into the 4th of July holiday, which we see every single year, that's going to push oil up. I think WTI has $90 a barrel written all over it. So rig, Transocean is one of the plays in that space. I would keep my eye on those oil stocks, Liz.
And you can always buy oil volatility, the OVX, which is right up on our screen right now. While it's slightly down right now, it has had a pretty significant run up over the past more than 6 months, I believe, or at least year to date. All right, Peter, you've got to explain about the options to buy, the opportunities to buy oil names, or let's say, for example, gold and silver names. Silver's really roared higher. What are your picks here?
Well, you know, I think that these mining stocks are going to explode almost any day. You know, this week, the GDX, which is an index of senior gold mining stocks, is up 7%. A GDXJ, which is junior mining stocks, is up 9%. But these stocks are still dirt cheap. They're barely positive on the year because the whole time gold was rising, everybody expected it to fall. You know, a couple of months ago or 1 month ago, analysts were downgrading Newmont Mining and Barrick Gold to sells. You know, basically holds and sells. These stocks are now up 30% since those downgrades. Wall Street has got this trade completely wrong. You should just buy these stocks. You know, I manage a gold fund, the Euro Pacific Gold Fund. Adrian Day manages for me. People can buy that no load. If you want to buy individual stocks, you know, I gave you a couple of names: Pan American Silver for silver, Agnico Eagle in the gold space. But just buy them. You don't have to wait for a dip. They're cheap, even though they've gone up so much. You just got to get into these names. It's a stealth bull market. And especially if you were foolish enough to buy any of these Bitcoin ETFs, you should sell these ETFs right now before the market closes. Take that money, put it into some gold stocks, right? Because Bitcoin is fool's gold. You want to own the real thing. And if you really want to make 10 times your money, 50 times your money, I think you can do it in these junior mining stocks.
Junior mining stocks, 2 names. He gives us AEM and PAAS for those of you.
Well, those aren't juniors. Those are big. Those are big
names, but some other names as well. All right. Thank you. Peter Schiff, John Najarian, great to have you.